Good morning, everyone, and welcome to today's webinar, Non-QM Loan Solutions for Today's Borrowers. We are, throughout the presentation, as questions come up, as I'm sure they will, please go ahead and use the questions little function, chat function, and at the end, during the Q&A questions, we will get through all of that. With that, I would like to hand it over to today's presenter, Todd Harris. Take it away, Todd.
Thank you, Rose, and thank you everyone for joining our webinar today. My name is Todd Harris, and I'm the National Sales Director at LendSure Mortgage. I'm excited to talk with you guys about the non-QM space today, and specifically LendSure Mortgage and our re-entry into that non-QM marketplace. I'd like to talk a little bit about our agenda today. I'll be respectful of your time. I plan on speaking to you for about 20 minutes, and during that 20 minutes, I'm going to talk to you about LendSure, the state of our lending industry, and tell you a little bit about the products and programs we do here at LendSure. At the end, we will open things up for questions to be answered by Steve Moloff, who runs our credit and underwriting department, and Joe Leyden, who's one of the managing directors here at LendSure. So a little bit about us. We were founded in 2015. We're headquartered in San Diego. We have a regional operations center in Warwick, Rhode Island, and then another one in Atlanta, Georgia. We've been securitizing loans annually since 2017. We've got a highly experienced non-QM management team. I think that's important in today's industry, and it's something we want to point out. A number of us who are in the management group here at LendSure were also in the management group of Accredited Home Lenders, which was a highly respected company in the 90s and the 2000s. We're lending in 41 states and always looking to grow out those states as we continue to find business in those other states. A little bit about what we do. At LendSure, we focus on making loans with a solid benefit and loans that perform. We serve the A-paper, credit-worthy borrowers you talk to every day. Now that's important to note, because we're not asking you to get involved in the non-QM space by soliciting new borrowers. The people that we see that come into the non-QM space are typically the same credit-worthy borrowers you're working with today. They don't come to us typically due to credit issues. They usually come to us due to income issues. And so some of those income issues are what we try to work with and find alternative ways to document that income. We do that through bank statement transactions. We do that through asset depletion, where we get verification of your assets and then give you credit for income from those assets. We calculate the rental income differently than Fannie and Freddie, and we'll talk about that a little bit later. We also allow investment property cash flow deals. That allows us to work with non-owner occupied properties and base those decisions off the cash flow of those properties. I get questions all the time as to what do our loans look like? Well, just so you guys know, the average FICO is a little over 700 and the average LTV is below 70%. And sometimes it's best to frame up what we do by talking about what we don't do. And we don't do any Freddie, Fannie, FHA, VA, HARP loans, any of those types of things we don't do. We don't do foreclosures, and we don't do second mortgages. I want to talk just briefly about the economy and just the lending environment. I'm sure you guys were shocked every bit as much as myself when you watch the stock market go racing up 1,000 points and then you watch it fall 1,000 points the very next day. But that's what was going on. It's gotten a little better now, but there's still a lot of volatility. In just 60 days, unemployment soared up to levels that were unseen since the Great Depression. Forbearance requests, they jumped 2,000% from March to May. Never have they jumped that much in such a short period of time. Liquidity for the non-QM lending space disappeared overnight, and that's something we know especially so. And then the future, it's uncertain. Does the economy come racing back? Is there a second wave to the virus? Will we find a vaccine? These are all the questions that are being asked out there which are causing a lot of uncertainty as the economy tries to get back up and running. So how's the pandemic? How's that affect lending? Well, I don't need to tell you guys, but many of the loan programs that existed 90 days ago in the non-QM space and the QM space are no longer available. Some conforming lenders, they're not able to do cash out loans. Jumbo financing has tightened significantly, and in some markets and with some lenders, it's been eliminated completely. VA jumbo lending is also struggling and has taken a major hit. And FHA FICOs have jumped up quite a bit. In some cases, they've jumped up and are very similar and at the same levels as the conforming FICO requirements. And needless to say, home equity lines of credit have been frozen by most lenders and are not being offered anymore. So all of this adversity creates opportunities. And one of the quotes I like quite a bit is by Warren Buffett. This is his quote here where he says, "Only when the tide goes out do you discover who has been swimming naked." Now, while that's a little bit humorous and a bit visually disturbing for some of us, it is a serious comment. He says these things because when the market is rising or business conditions in general are easy, most investors and financial planners look good. On the other hand, when business conditions worsen and the stock market goes down, it's much easier to see who truly has a thought out business model. So that's what Warren Buffett says. And I think this is very applicable to the mortgage business. We all look like heroes when rates are low. Right now, many loan officers are having record months due to low rates. And if you think about that for a second, all of this is happening despite all the uncertainty in the economy around us. So the question is, what is our plan when rates go up? Being educated in the non-QM space and partnering with a good lender gives you a lot of credibility. One of my goals today is to convince you that LendSure is that non-QM lender for now and in the future. So with that said, let's talk a little bit about some of the various programs we have. We'll start with the bank statement program. We do an upfront evaluation of income. Just send us the bank statements and we'll be glad to look at that income and come back with what we'll qualify you with. We do not require P&L statements. We go up to 80% loan to value. The borrower does not have to be the sole owner of the business. That's important. We use personal or business bank statement accounts. And we use a variable expense factor. So I've got a chart here that kind of explains and puts things in a compare and contrast situation. The second one down, where it talks about the minimum business expense ratio, I think that's important to note. We go as low as 10%. We have a self-employed questionnaire that we'll have your borrower fill out that tells us a little bit more about the business, and then we can make a decision on the expense factor based on the rent, employee costs, and other costs that are associated with their business. Most other competitors don't like to go below 35%, so this allows us to do a lot more business bank statement transactions than others. Another thing I'd like to point out is at the bottom where it says non-sufficient funds and overdrafts. We're flexible on those, whereas most other lenders have a serious problem doing those loans if there's a non-sufficient fund in the account. I'd like to talk just briefly about our investment property loans. We don't limit the number of properties an investor can own. LendSure can finance up to 10 loans for any one investor. So if you have an investor that owns 50 properties, that's okay, because we don't limit the number of properties. It's just LendSure can only finance 10 of those 50 properties. We have DTIs up to 50%. We do non-warrantable condos and Condotels. We have a rate buy-down feature, which we allow with no out-of-pocket expense. We'll talk a little bit more about that later. We do full doc and bank statement loans. And we also have an investment property cash flow program, formerly known as DSCR, or debt service coverage ratio. But no debt ratios are basically it's a no debt ratio loan, and you just need to be at 125% of the PITI for the rent payments that are coming in. You can also use the interest only payment to calculate that ratio. So by using interest only, that helps you qualify with a higher ratio and get to that 125%. Some other things we do a little different here at LendSure is the way we calculate the income on rentals. So we definitely do it different than Fannie and Freddie. And so Fannie and Freddie, they add the negative rental cash flow to the monthly debt calculation. This results in a higher DTI. At LendSure, we use the negative rent cash flow to offset the total income. And this results in a lower DTI and better rates. And so I've got a chart coming up here that kind of explains that, and I'll go through it with you because it's important to understand this. Here we've got a couple, Roger and Stacy. Roger makes $65.31. Stacy makes $6,006. So you can see those incomes in the two columns. Roger and Stacy own a couple of rental properties currently, and we use the Schedule E method to come up with a loss on those properties, and that loss is $23.48, which you'll see there on the LendSure side. The property they're buying, we use the net rental method, where it's gross rents times 75% minus the PITIA, and the loss on that one comes to $11.96. So you'll see that we subtract that from the income. Now that gives us a lower income of $89.92 compared to Fannie Mae's calculation of $12,537. But where it gets important is on the next slide. You can see the total incomes being carried to the top of this slide. And then we come through and we start subtracting the debts. So we got a mortgage payment, we got some credit cards, we got an auto loan. But we haven't accounted for those losses yet on the Fannie Mae side. So we insert the loss of $23.48 and we insert the other loss of $11.96 and we add those to the debts. That pushes up the total debts on the Fannie Mae side to $6,448, and it gives us a 51.4% DTI. That's a turn down. That doesn't work. On the LendSure side, we've already accounted for that loss, those two losses in the income on the previous slide. So all we do is we add up the mortgage payment, the credit cards, and the auto loans. That comes to $29.04. That gives us a 32.3% DTI. And that is now an approval. That's a loan that we can do, and we can do it at a good rate because the debt ratio isn't too high. So this is very important to know, especially as you work with property investors. It's especially important for some of the loans out there where those investors might have private money loans. And so you haven't been able to do them in the past, but you would be able to do them here. Let's talk about the foreign national loan program for just a minute. I got a slide up here which I find interesting, and I thought you guys would as well. If you look on the left-hand side, you can see that foreign nationals actually average a higher purchase price than people who live here in the U.S. In fact, it's almost $50,000 higher. Another stat that's interesting to see is where these borrowers, these foreign nationals, are coming from. China, far and away, is leading the pack, but they also come from Canada, the United Kingdom, India, and Mexico. And if you look to the right, another stat that's fairly interesting is the Asia Pacific region has surpassed North America as the wealthiest region in 2015. The United States is the most wealthy country in the world, so you would think that that would not be the case, but it is. So this puts on display the opportunity that exists with foreign nationals because they're looking to place their money into investments that they feel are stable. And the U.S. housing market has always been seen as a very stable investment. Let's talk about some of the details behind our foreign national program. We go to 65% LTV on a purchase or a refi, and we go to 60% LTV on cash out loans. Credit scores are not required. We accept foreign credit reports or credit reference letters. We accept income verification letters as well. And foreign assets can be used for reserve requirements. I want to make sure I point that out because that's not necessarily the case at some of our competitors. Now, all these loans, these foreign national loans, can be a little confusing when you first do them, but we've got a number of experienced account executives who would love to talk with you and walk the process through with you to allow you to be successful. If you do one or two of these transactions, it'll become second nature to you and you'll be up and running quickly. And it's a strong referral basis. When they do one loan with you, they'll do the future loans with you and they'll refer their friends. So you really do want to look into this foreign national stuff as much as possible. So I thought we'd talk about some of the opportunities at LendSure. These are some of the things that we've talked about so far in the presentation, but I want to make sure we highlight them again. We do cash out loans. As we talked about, many lenders, conforming lenders today, have limited cash out loans or completely eliminated them, but we still do them. We do non-warrantable condos. We do Condotels. We do larger acreage properties. We finance 2 to 4 unit properties. We're still doing second homes. And we do plenty of jumbo loans. We have the investor cash flow loan program, which is formerly the DSCR program. And as we talked about earlier, we have bank statement loans. We use asset depletion, and we can do that as the sole source of income, or we can supplement it with other sources of income. So that's important to note as well. If a deal looks like it's struggling on the DTI, yet you've got a borrower with good assets, well, let's look at those assets and see if we can't bring that DTI in line. We still offer interest-only loans. We use the start rate to calculate the DTI on business purpose loans. We do non-permanent resident alien loans. We do construction takeout loans. We do lease option and land contract loans, and we treat them as refinances. Our properties can be held in LLCs with certain restrictions, so that's important as well. And the last bullet point, which I wanted to mention, is LendSure can finance up to an extra 2% LTV for any lender or broker costs when the base LTV is at 75% or less. I don't want to go into a lot of detail in a webinar like this, but this is a major competitive advantage for us and something that is really beneficial to you and to your borrowers. So if you're charging 2% borrower paid comp, you can take that 2% and you can increase the loan amount by that 2% so that your borrower does not have to bring that money into closing. Again, we have lots of account executives who would like to talk to you in detail about that and explain how that works, because it's a huge advantage for us and it's something that we love doing on any and all loans. So with that said, we'll kind of open it up to questions, and I'll turn it over to Steve and to Joe. Thank you.
Thanks, everyone. As I mentioned earlier, please go ahead and use the questions function to submit your questions, and I will share those with the panel. I'm getting a lot of questions about whether you guys will be getting a copy of the presentation. Yes, in about 30 or 40 minutes, look for a thank you email from me, and it will have a copy of the recording and it will have a copy of the slide deck. So with that, let's get started on some of the questions. Do we lend in Venezuela?
We do not.
Okay. For investment property loans, are gift funds allowed?
This is Steve. Yes, they are.
Okay, great. And for investment properties, what's the LTV and cash out?
This is Steve again. The standard on our expanded program, once again, your AEs can get you, can walk you through our different 4 products that we have with different variations. But investors can go to 75 on purchase on our expanded program, 65 rate term, and 60 cash out, and they can use bank statements or full doc. On the investor cash flow, we go up to 70% on purchase and 65 on rate and term, as well as cash out.
Are I-10 applicants eligible under your foreign national program?
Not at this time.
Okay, great. And then can you go over how flexible you are on non-warrantable condos?
Joe, I didn't know if you want me to take this one.
You can take it, Steve.
Okay, thank you. Non-warrantable condos. Well, whenever we're looking at a non-warrantable condo, obviously the condo cert really tells you how non-warrantable that condo is. So when we typically look at a non-warrantable condo, we're looking at where's the location of the condo, how's the marketability of the condo, are we getting comps in the complex, is it a mid-rise, a low-rise, where is it located, is the items that make it non-warrantable, is it significant, or is it something minor like a slight difference in the occupancy? We do non-warrantable condos as well. If they have litigation, if it's generally not a structural issue, we'll take a look at that as well. It also depends on the strength of the borrower. So a lot of different scenarios, condos become unwarrantable. So the best thing is to get the questionnaire, get us the information, we'll take a look at it and try to get you a quick answer.
Are there any limitations on these products on properties designated as income restricted or affordable housing?
We have done those products in the past. We do have some capability. It really depends on what the governance is around the program they're trying to qualify on. So you need to get us the detail in order for us to make a decision on that. So it's not a no. We have to know because there's across the country, there are so many different types of those programs. We really need the detail.
Okay. What kind of rate for condo hotels, 60% foreign nationals, Colombia, Mexico, Ecuador, and what's the reserve requirement?
Rose, I heard a little reverberation on that. Right now, I'll try to go through that. On Condotels, we're at 70 with a 680 score, purchase only. On the other question, Rose, I heard a couple other countries listed. We generally are allowing foreign nationals on countries that don't have current U.S. sanctions against those countries. Sometimes it depends on whether if there's active turmoil or other travel restrictions with those countries right now, we're going to look at those.
Thank you, Steve. Steve, there seems to be a little bit of an issue with your audio. Is there any chance we can maybe turn off the volume on the computer, maybe?
My volume is off in the computer speaker. Let me try something here. It is currently off as well.
Okay, we'll just work through it. And what's the loan amount range for investor cash flow loans?
Okay, on the investor cash flow, the loan amount there, the max is $750, and then we described that cash out is at $65, and purchase and rate and term is at $70.
What loan programs do you have available for investor cash flows? For example, ARMs, 30-year fixed.
We have a 5/1 ARM as well as a 30-year fixed, as well as the IO option.
Okay. What about our I-10 program? Will it open up soon?
That just depends on the current market. Right now, there's not a market for those as a securitized product, so we'll know more as the market hopes to level here within the 30, 60, 90 days.
Okay. I have several questions coming in about, can you send me guidelines and who's my account executive and how do I submit a loan scenario? If you're not currently working with an account executive, when you get that email with the thank you email, go ahead and reply to that, and that will come to me. I will make sure to connect you with your LendSure account executive, and I'll make sure that your questions are answered and that you have someone that you can talk to about loan scenarios. Okay. So for larger acre properties, what's the limits on that?
We look at those on a case-by-case. Our guidelines normally say up to 10 acres. We generally don't like doing working farms, but it's all about getting light comps. If it's depending on how rural the nature is, we're generally at 70 on those, depending how far they're outside a major metro. But we'll take a look at anything if we feel good about the customer and we can get some good comps and the marketability in that area is positive.
Okay. What's the minimum business ownership required?
There is not really a minimum. Obviously, if you don't have a controlling interest in the business, we want to make sure all the partners have an understanding if that person actually has access to the funds we're using to qualify. So once again, that's a case-by-case basis.
Do we have a one-year tax return program?
Not at this time, but that's another item we'll be looking to reinstitute as soon as the market's level set.
Are you doing cash out refis on primary residences? And if so, what's the LTV?
Sure. Yes, we're still doing cash out on primary residences, and we do them with bank statements as well as full doc. The cash out currently is 70%. That's our standard, and we will go up to $250,000. Once again, we do make deviations from that. It just depends on the strength of the borrower, the collateral, reserves, and the other items associated.
Do we do 12 and 24-month bank statement programs?
Currently, we're at 12 months bank statements. We'll be looking at, 24 months. We'll be looking at the 12 months once again as we see the market changing.
Okay. More questions about who my account executive is. Go ahead and reply to the email that I'm going to be sending you later, and I will connect you with your account executive. Do we have to submit loan scenario to be able to obtain pricing? Do you publish a rate sheet?
Yes, we do, and your account executive can help you with that. We also have a robust pre-qual program where you have operations teams that can help you get a pretty solid decision whether or not we'll be able to move forward. And so your pricing will stick with the customer. So please call your account executive.
What's the outlook for New York?
Actually, I think pretty good. We've been in the application process for now a little bit more than a year, but just last week we had some dialogue back and forth with the regulators, and I received the dialogue as though it was a bullish thing. They're asking questions. We're now moving up to the kind of the final level. The more senior people are looking at the application. So all of the pain we've endured, and we seem to be getting close to the goal line.
Is LendSure allowing for investor cash flow loans to be an actual business purpose loan, as in a broker in California can close deals outside of California for this program?
It sounded like two questions. Yes, we are allowing for cash flow loans. And can a broker close a loan outside of California if you're licensed to do so in that state? The answer is yes.
What about hemp employees, hemp industry employees?
Currently, anyone that is involved with working or owning a part of a organization that is actually selling the marijuana product that is associated with the high versus some of the oils that don't have that effect, those currently are not available.
How do we get pricing? Do we have an online pricing engine?
We do not. Best thing for you to do would be contact your AE, have the AE basically talk to you about the loan. They will, at the end of that, will be able to price it for you. We don't have a pricing engine because 40 to 50% of the loans that we do make have exceptions on them. We like to think that we're very good credit people, and we don't like missing loans on the edges. So we don't really want a computer saying to you, we can or cannot do something. So that's why we do that.
Do we have a minimum loan amount?
There is minimum loan amount guidance that we have. Generally across the board, it's 150. However, once again, if it's the right deal at the right LTV, and we will take a look at those on an individual basis.
Will you take the entire amount of the lease rental payment towards the down payment?
That's an interesting question. I think we're referring to lease options and land contracts. How we do that, if the lease option or land contract has been in place for 2 years, we'll actually treat that as a refinance so they can get the value of the equity that's accrued during that period. Also, if the lease option piece is where someone's been paying X amount of amounts over the market rent, where the seller has agreement in writing that they're going to credit them with X amount of funds and we can show that's been received, then that can go towards the down payment.
On DSCR programs, if the property is not rented, would the DSCR be 0? Would you lend?
If the DSCR property is not currently rented, obviously we want to have an understanding. If it's a purchase, it could be in transition, so that's possible. As long as it's ready to lend, then we will refer back to the either 1017 or 1007 rent survey or the 216 operating statement to use the market rents that we should be receiving when it is occupied to calculate.
Do you make exceptions? And if so, what would entail making an exception?
Exceptions are driven really based on the overall loan scenario and where we're trying to get to. So we make exceptions across all products and on all categories for the most part if we have other compensating factors in the other categories of the loan. So if you have a lower LTV, you're off slightly on the credit. You've got good income, well, we're doing the compensating factors versus the other risks, and we outweigh those and try to, as long as we have good benefit, we believe they're going to repay, you look for ways to try to make that loan.
Yes, an example of one that I just did yesterday or a few days ago was the request was for $1 million in cash out. Because the loan to value was at 20% on a property in Malibu, it seemed to be an easy decision for us, so we approved it.
Okay, we've got a couple of different questions on the LTVs and loan amounts. The LTVs on our bank statement programs.
Just a general question?
Yeah, just like what's the LTV on our 12 and 24 month program? I think you already covered that we don't do the 12 month anymore. And then what's the LTV on our bank statement program?
We do go up to 80% on our bank statement program, both in our super prime, our top tier borrower, as well as our expanded program. You can get more information from your account executive. Across the board, we really don't cut back for the loan size. So we will go up to $3 million on our loans on purchases. We'll go up to $1.5 million at 75% on purchases, $3 million or at 65% LTV. With slight variances. Once again, the easiest way is to call your account executive with a scenario and we'll see how close you are to fitting and see what we can do about getting you an approval.
Okay. Rate sheets for DSCR products. What's the minimum FICO and maximum LTV for cash out?
Okay, the minimum FICO currently on the debt service coverage ratio, we're also calling it investor cash flow on our rate sheet. Minimum FICO is 680 and the maximum cash out currently is 65% LTV.
Okay. And I'm getting a lot of questions that we've already addressed, so bear with me for just a moment. Okay, do you use DSCR for 2 to 4 investors?
Yes, we do.
Okay. And what's the maximum loan amount for full doc 2-year, 1040, 1120?
That would be $3 million again for prime.
Okay. And I think we've answered all the questions, the rest of the ones that I see here. Oh, excuse me, I'm sorry, I'm getting some more. Bear with me just a moment. Can you do a loan where the self-employed borrower has been in business for only 1 year, but has worked in the industry for several years?
Once again, that is a deviation to our current product. It should be 2 years. However, we will look at all the compensating factors to see if we can get comfortable if he's in the same line of work.
Okay. And the rate buy down, can you tell us, elaborate a little bit more about what the rate buy down program looks like?
Yeah, it's 2 for 1. So if you want to buy the rate down 100 basis points, you'd be paying 2 points. Todd mentioned in the presentation that we allow you to stack points. So it really depends on the LTV. But for example, if you were to do a 75% loan, you could take those 2 points and just put them on top of that 75. And so the borrower would get 100 basis points less than his rate, and we would be financing the points over and above the prescribed bucket that you were in, LTV, FICO bucket, without going to the next interest rate. So it's a big positive for a broker and for a borrower.
Can you use personal bank statements for the bank statement program?
Yes.
Okay. Can cash out be used as reserves?
It cannot.
Not at this time.
Okay. Are there any programs for borrowers sub 580 FICO?
I want to say back to the exceptions. I've made loans all my life, so if the loan makes sense, I'd probably do it. But we don't fancy ourselves as being bottom dweller type lenders. We don't really do a lot of the lower LTV loans, though occasionally they come along and the guy's paid his mortgage forever, and though he's got a bad FICO, maybe he's got some other credit kinds of issues, but his mortgage history has always been good and the LTV is low and it's a full doc deal, and we say this makes all the sense in the world. So I hate guidelines. I hate rules. I like to use my brain. We at LendSure like to use our brains when we make loans. So that would be an example of one that we would do.
Okay. For a full doc self-employed borrower, will you ask for business bank statement to see the current income?
Will you repeat the question, Rose? I didn't get it. I started to do something else.
If it's a full doc loan, if the person is self-employed, will you ask for the business bank statements?
Yes.
Joe, I can try that.
Okay. Go for it.
Well, thanks. During the current environment, with most self-employed people filing for extensions, you really don't have any evidence of income except going back to the last 2018 tax return. So we may require the most recent months to at least see revenue of the business support the income that he had prior, especially in the current period.
For a new broker being signed on with LendSure, what's the time frame for that? What's the turn time?
A day? I mean, generally speaking, we don't hold up talking to you about a loan just because you're not an approved broker. We, in fact, like to try to make it easy for you. It's usually, for new brokers, usually it's the first step on the first loan. You've got to have your broker package submitted and approved. We use co-emergence to do that. So usually it's a, call it a day, maybe 2-day process, but that's fairly low maintenance on you.
Okay, good. Here's a really timely question. With the COVID situation, are recent mortgage rates or forbearances a deal killer?
Yeah, that's an interesting question. In fact, I presented that question to our investor, the folks that are buying the loans, and it was a conundrum for them. Of course, I did that on purpose because we know that a number of borrowers out there are taking advantage of the deferment program just because they can, not necessarily because they have a need. And so I'd say to you, I don't want to say, no, we won't do it. I'd say currently today, I might drag my feet on that a little bit. But, I looked at one a few days ago and it was this, it was the borrower was actually a good borrower, but he did take advantage of the deferment program. And then last week, he's asking us for, or last week, it might have been Monday, he was asking us for a loan. And he did take a deferment 30 days ago, and now he wants a cash out loan. And so it certainly does cause one to say, well, wait a minute, what's going on here? So I haven't seen the full package yet, but I didn't say no to it. I said it's really going to depend on loan to value and the guy's income. So I think probably the bigger issue that we're going to be challenged with as we move forward in this current market, as all of you know, things are fluid is probably the best way to describe the market in the last 75 days, and it remains fluid. By that I mean it's changing nearly daily. The states are behaving differently from one state to the next, and they're changing on the fly. One day they're locked down, the next day they're opening up, and so that for me is very fluid. And until America gets back to work, it's going to cause some consternation in the lending environment. In fact, that's why presently, I don't think Todd mentioned this earlier, presently there is no liquidity in the space. When I say liquidity, I'm really speaking to the securitization market. Now, Ellington, our financial partner, is attempting to get a securitization off here in the next few weeks, as is several other parties. The reality of the day, I think all of those parties are knowing that the kinds of structures that are going to likely go off will be somewhat painful for the issuers. But nonetheless, it will clear out what we call the legacy pools of loans, and so that will take care of what's on all of the non-QM lenders' warehouse lines, and so they'll be moved off of their balance sheets. And then on a go-forward basis, then they still have to find an entity that will buy the loans and essentially balance sheet the loans, because if the securitization structures aren't palatable, then there won't be any liquidity there. So that's why you've seen kind of a tightening in the market, shrink back the loan quality, the LTVs, and move up the pricing, because these loans are not being securitized, so you don't have an efficient liquidity system for them. But I think as America gets back to work and things begin to change, I think the liquidity slowly comes back. And I think most people in the space are thinking that as well. So presently we're in business. Presently we do have a forward commitment to buy loans. We do have active warehouse lines for the products in our product menu. And so that's all a good thing. We understand they are not the same product menus that we had 60, 75 days ago, nor is the pricing. We understand that these loans will be more Band-Aid-like in that you're going to want to refinance out of them in a year or so. So we get all of that. So sorry for that long-winded answer. There you have it.
Will we take transferred appraisals?
On purchase money transactions, the answer is yes. On refis, the answer is no.
Okay. Do we have approval for either DRA or Department of California license, or both?
I want to say I'm a little rusty on that. I think we just have the DRE license and we don't have the CFL license, but we may have that other license that you mentioned. We'd have to get back to you on that. And Rose, I would just shoot an email to Dave Herzl, ask the question, and then maybe answer that question when you respond to these folks in 30 minutes.
Okay. Do we do bridge loans?
We used to do bridge loans. I love the program. We were the only ones in the space beyond Axios who had them. Presently, we do not. I expect that product to come back once the market normalizes.
Okay. And I've got a couple of different questions about where they would get pricing for their loan scenarios. Go ahead and reply to the thank you email that you're going to get shortly, and I will connect you with your LendSure account executive who can help you with your loan scenarios, who can help you with pricing. Are you accepting e-sign or notarized docs for Foreign National program?
Rose, can you repeat that?
Are you accepting e-sign or notarized docs for Foreign National?
Well, that's kind of an interesting question. We do our disclosures electronically if we have a good email address, so yes. And also anything is a collateral package needs to be notarized anyway, so I would say yes, we require that, and yes, we do things electronically.
Okay. I have a question here. Do you do mixed use properties? And a second question for someone else, do you do mobile home loans?
While Steve loves the mobile home loans, we've taken that out of our product menu. With respect to the mixed use properties, I think we'd consider them, though we're fairly conservative on mixed use properties, but we will consider them.
Okay. And the questions that I have left, I think we've all answered them and when other people ask them. So I think we are good. If any other questions arrive, please go ahead and reply to the email that you're going to get, the thank you email, and I will get that the questions answered for you, and I will connect you with your LendSure account executive. With that, any parting words, Joe, Steve, or Todd?
My parting words would be thank you for taking the time to spend with us this morning, and we look forward to doing business with you.
I agree with that comment. Thank you.
Yes, thank you.
Thank you, everyone, for joining us today. Have a great day.